Hello and welcome to the Chart of the Week. My name is Pete Stolzers and I'm the founder of OneOption.com. Before I get started, I'd like to encourage new visitors to view the introductory videos. If you're watching the videos on YouTube, the introduction is a three-part series. They describe my systematic approach to option trading. To learn more about my approach, please visit my blog. It uses the number 1 in the web address. To try my research products, please visit my research site. The web address spells the word one out. Both sites are linked and ultimately OneOption.com will get you where you want to go. I'd also like to mention that on YouTube the Chart of the Week video is divided into two parts. Make sure to watch the second part since it includes the highlighted stock. 75% of all stocks follow the market, and that's where my analysis starts. Let's take a look at the market action. This is a one-year chart of the SPY, the S&P 500 Depository Receipt. We can see that the market pulled back last October and then rallied to a new relative high in October. Since we made that high in October, the market fell very sharply and it established a low in January. That was a capitulation low, and we can't see quite how damaging that decline was because these prices are on a closing basis. The market rallied and then retested that low, so we now have a double bottom, and that low was put in March. Since then, the market has been able to work its way higher, and it's grinding up to a horizontal resistance level at SPY 144. That's a horizontal resistance level, and it also is a 5-year uptrend line that was broken in January, and it's the 200-day moving average. So this level right in here represents major resistance. We'll be able to pick that up on a shorter term chart. This is a 1-month chart, and we can see that the market has systematically worked its way higher. It rallies and pulls back, rallies and pulls back. This recent decline is what transpired over the course of the last week. So let's zoom in and take a look at that. We can see here that last Friday the market was pretty choppy. It tried the downside and then finished basically unchanged for the day. Monday, the market rallied early and it ran right up to major resistance at 144. It did so with relative ease, and I was somewhat surprised by it, but by mid-afternoon the sellers materialized and they pushed the market down. This reversal paved the way for selling on Tuesday. There's a gap down on Tuesday's open, and that's because of the hot PPI number that came out. Market sold off most of the day and rallied right into the bell. Yesterday, the market tried to rally early but reversed quickly and tested the downside immediately. In the afternoon, the FOMC minutes were released, and that's when the selling really took hold. Today's been a relatively quiet day, range bound, and we would expect that because we're heading into the Memorial Weekend holiday. Overall, my assessment is that the market has been in a nice upward trend for the last 45 days. However, I do not believe it will be able to get through that SPY 144 level with ease. So I'd like to take a look at some short-term bearish trades, and my approach would be to try and sell some out-of-the-money call credit spreads on stocks that have been weak relative to the overall market. To take advantage of that strategy, I'll be using one of my searches today called EDCE Redline. That stands for bearish, day, continuation, early. And in these particular searches, the stock has opened near its high and it's trading near its low on an expanded daily range. The stock has been in an intermediate term downtrend and it's showing weakness. This is my scanner, and here we can see the search results for EDCE Redline. What I'll be doing is I'll be clicking through each one of these charts and I'll be telling you exactly what I'm looking for in this particular trading setup. In each one of these charts, I'll be starting with a longer term viewpoint. The first stock is ASYS, and ultimately for a continuation trade, a bearish continuation trade, I'll be looking for a stock that is trending lower and lower, and if I could, I'd like to draw a 45-degree angle from the upper left-hand corner down to the lower right-hand corner. That would be an ideal candidate. In this particular case, we can see that the stock rallied up last year, hit a resistance level in November, and then sold off sharply. Since then, the stock has been able to, in a choppy fashion, grind its way higher back up to this $13 level. Recently, the stock has pulled back very hard. Now, this pullback happened before the market had even started to roll over. So this stock is relatively weak. It's not the ideal setup that I'd be looking for. We can also see that it's broken through horizontal support at the $9.50 level here. So it would be of interest, and we'll just take a look at the 1 week chart. Here we can see how negative the recent price action has been. However, I don't like shorting stocks that are in a $10 range, so I'm going to take a pass on this particular stock.